Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Clay Hamlin, a partner here at the firm. Clay, how are you doing?
Fine, Mark. How are you doing too?
I'm doing pretty well.
Yeah,
It's nice to be past all the tax season stuff. It's on, back to the kind of normal grind. But one thing that we're kind of looking at is the IRS is losing a considerable amount of their workforce. How does that affect, first off, small businesses, and how does that affect kind of like us?
Sure. There's really probably two major effects. One of them is kind of a half joking thing, which is if you're going to take an aggressive position, it's probably the best time in quite a while to take an aggressive position because fewer things are going to get looked at. There's just no two ways about it. Mm-hmm. The audit process is still a computer does what's called a diff score. Basically, they calculate some sort of, there's an algorithm the IRS has never shared, and they determine how risky they think your tax return is. But then it gets kicked out to someone. Well, if you're 1/3 less the number of people, there's fewer people to kick that out to.
Well, and so then even if there's less, they're trying to get them to do more, right? And they can only get so much done in a day.
Yeah. We're talking the IRS here.
We are.
So, yes, with 1/3 less people, but they do have still formidable computers, and they still have formidable checking. Like, you get a 1099 submitted by somebody else, and it's for your tax, connects to your tax return. Mm-hmm. They have millions and millions of documents for checking to make sure that people are reporting the type of income that they're supposed to be. Okay. And the IRS keeps getting better and better at that. And they're also very good at sending notices. They send a lot of notices, and they're getting more aggressive. So that's the bad side of it. Will be when you get one of these notices, there's 1/3 fewer people to help you figure out what's going on. And so,
gotcha.
Yeah, that's going to be the hard part, is actually finding someone who can help get, navigate the problem for you. And I don't know that, I don't know how this is going to turn out, because if you just rip 1/3 of the employees out of the IRS, I think there's going to be a battle. People are going to start complaining. Congress people are going to say, hey, what the heck is going on? But there's going to be a lot of people with unanswered questions, and the IRS is just going to eventually just take the money out of their bank account.
And again, they don't have any knowledge because they haven't been able to talk to anybody. The best thing they can do is talk to their accountant, who can try to make sense of what they've been told.
It's true, and we bought a service that jumps the line.
Okay.
So
is this like Six Flags where you get the speed pass?
That's exactly what it is. So when you call, you might have to wait 4 or 5 hours, and I might wait 10 minutes.
Okay.
It doesn't mean that I get a better quality person, answering that phone. It just means I get there faster. And then about, in our estimation, somewhere between 25% and 1/3 of the calls just get dropped. You're talking with a person, and about 5 minutes in, the call just goes dead. It is unbelievably frustrating, especially if you've been waiting in line for 4 hours.
Yep.
And after 5 minutes of talking with someone, you start getting into the conversation, the call just goes dead. And it happens to us too.
Okay.
But at least we don't have to wait 4 or 5 hours to get there.
Right.
So that is going to be a major change when people, they think, well, it's good to be aggressive. And I can't disagree with that. But on the flip side, the IRS's computer systems are formidable, and pigs get fat and hogs get slaughtered. You just don't want to be in the slaughtered. And then you're going to have the problem of not being able to talk with anybody.
And then trying to get it corrected is going to be an absolute nightmare.
It's just put it in the black box and hope.
Yeah. So what's ultimately the best solution that can be provided? Essentially, do your taxes the best you can, work with your accountant, and
yes. So, when we file a return, right, we know pretty much the things that are going to cause a problem. And so it's good to file with someone who's experienced because they can eyeball the things that are going to be a problem. So, as an example, recently I had a client who wanted to deduct like $125,000 worth of mortgage interest.
Okay.
And they had it. They had that much. But you can't deduct mortgage interest more than on more than $750,000 worth of debt. Well, when you do the math, right, $750,000 worth of debt at, say, a 5% interest rate is way less than $125,000. The IRS's computers are going to immediately kick that out, and then what happens? What are you going to do about this? Because they're going to just send you a gigantic bill, and when you call, nothing's going to happen. And eventually, they just get more aggressive, and they're just like, "Well, we're just going to take the money out of your bank account. Thank you very much."
And no ifs, ands, or buts about it.
No.
And even if that happened and you try to dispute it, what are the chances that's going to happen?
It's not. I mean, you can't reach anybody.
Yeah. So in reality, it's you gotta be smart with what you're doing.
Yep.
Right. And again, that is a very aggressive stance to take on your mortgage. Well, and again, they know what they're looking for. They have decades of tax returns. They know what people have done. They know what people are doing. They keep very good track.
And they do the math. They actually do that math. The IRS, we know the IRS's computers do the math. They take your interest expense, divide it by an average mortgage rate, and say, okay, well, that's way more than $750,000 for the debt.
And that's all before a human being even looks at it, right?
That's right. That's correct.
So it's essentially they're feeding it into a machine. It spits them all out. It says these are the highest. I don't want to say offenders, but have the highest score, right? And those are the ones that a person will review.
Yep. Or they don't even, what they're trying to do is get rid of the person to review. I know the Musk is really pushing on this. I don't know if he'll get there, but so that if it diffs out using that diff score, right? Okay. Just do the math and send a notice. And then from the IRS's standpoint, what's the downside of that? Not much.
Not much for them.
Not much for them.
It's a problem for the other person, though.
Yes. So it'll be interesting to see how this plays out. It'll probably take, a year or so before we really know how the gutting the IRS is going to come out. It is a big tax savings or big cost savings for the government.
It is.
But on the flip side, it will generate, they know that each agent generates, I think it's 3 or 4 times their wage. And so as far as bringing in revenue for the government, that's a whole other kettle of fish.
It's a whole nother story. Okay. Yeah. All right. So kind of long and short of this is from the IRS standpoint, if you need to get a hold of them, good luck.
Good luck.
Good luck.
Yep.
It was already good luck before. Now you need more.
Right.
But as far as putting our taxes in, not too much is changing. As far as submitting it, the computers are still doing their thing.
Yeah. There's been no change on that front.
All right. Perfect. Anything else you want to add, Clay?
No, that's good for now.
All right. Thank you.